Welcome to Wonderslate. Subscribe to our Telegram channel given in the description to updates and study materials. Topic for today's quiz is Sources of Business Finance. Question number 1. Equity shareholders are called Option A. Executives of the company. Option B. Owners of the company. Option C. Guardian of the company. Option D. Partners of the company. The correct answer is Option B. Owners of the company. The share capital is contributed by the shareholders and a share indicate how much ownership you have in the company. Thus equity shareholders are called owners. Question number 2. The term redeemable is used for Option A. Equity shares. Option B. Commercial paper. Option C. Preference shares. Option D. Public deposits. The correct answer is Option C. Preference shares, a type of preference shares, the capitals of which are to be paid back to the preference shareholders after expiry of some specified period known as redeemable preference shares. Question number 3. Funds required for purchasing current assets is an example of Option A. Lease financing. Option B. Working capital requirement. Option C. Plowing back of profits. Option D. Fixed capital requirement. The correct answer is Option B. Working capital requirement. The funds required for day-to-day operations, i.e. to meet expenses like wages, salary, rent, insurance etc. and investment in current assets, that is inventory, bills receivable etc. Question number 4. ADRs are issued in Option A. China. Option B. India. Option C. USA. Option D. Canada. The correct answer is Option C. USA. American depository receipts are issued by a non-US company to American citizens to obtain foreign capital. These can be listed and traded on a stock exchange of USA. Question number 5. Public deposits are the deposits that are raised directly from Option A. The public. Option B. The owners. Option C. The directors. Option D. The auditors. The correct answer is Option A. The public. Company issues a deposit receipt as acknowledgement of debt. The rate of interest is higher than bank deposits. Therefore, company can easily raise finance. Question number 6. Under the lease agreement, the lessee gets the right to Option A. Participate in the management of the organization. Option B. Use the asset for a specified period. Option C. Sell the assets. Option D. Share profits earned by the lessor. The correct answer is Option B. Use the asset for a specified period. Lease is an agreement between two parties, i.e. lessor and lessee, for the use of asset in return of periodic payment and for a specified period. Question number 7. Debentures represent Option A. Fluctuating capital of company. Option B. Fixed capital of company. Option C. Loan capital of the company. Option D. Permanent capital of the company. The correct answer is Option C. Loan capital of the company. Debentures come under borrowed funds and are issued for a specified period and to be paid back to the debenture holders after that period. Question number 8. Under the factoring arrangement, the factor, Option A, makes the payment on behalf of the client. Option B, collects the client's debt or account receivables. Option C, produces and distributes the goods or services. Option D, transfer the goods from one place to another. The correct answer is option B, collects the client's debt or account receivables, factors discount the bills and holds the responsibility of credit control and debt collection from the buyer. Question number 9. The maturity period of a commercial paper usually ranges from option A, 60 to 90 days, option B, 120 to 365 days, option C, 20 to 40 days, option D, 90 to 364 days. The correct answer is option D, 90 to 364 days. The RBI regulates commercial papers. CP is a source of short-term finance. The maturity period of CP ranges from 90 days to 364 days. Question number 10. Internal sources of capital are those that are option A, generated through outsiders such as suppliers, option B, generated within the business, option C, generated through issue of shares, option D, generated through loan from commercial banks. The correct answer is option B, generated within the business. These sources are generated by the organization itself, for example, plowing back of profits, collection of debtors and receivables. Question number 11. Sources of finance can be categorized as underscore. Option A, source of generation basis. Option B, ownership basis. Option C, period basis. Option D, all of these. The correct answer is option D, all of these. Question number 12. Why commercial papers can be issued only by large and creditworthy companies? Option A, it is protected by the government. Option B, it is fully secured debt. Option C, it is an unsecured debt. Option D, none of these. The correct answer is option C. It is an unsecured debt. An unsecured debt is an obligation or debt that does not have specific property, like your house or car, serving as collateral for payment of the debt. If you fail to make payment on an unsecured debt, the creditor cannot take any of your property, as the debt raised through commercial paper is totally unsecured. The large and creditworthy firms having good credit rating can issue the CP. Question number 13. Underscore is an example of short-term finance. Option A, trade credit. Option B, debenture. Option C, share. Option D, none of these. The correct answer is option A, trade credit. Trade credit is a short-term finance provided by one firm to another for routine business transactions. Question number 14. Expand GDR. Option A, government direct receipts. Option B, global depository receipts. Option C, gross domestic receipts. Option D, none of these. The correct answer is option B, global depository receipts. GDR is issued in more than one country for raising shares globally through various stock exchanges. Question number 15. Define the term ADR. Option A, American depository receipts. Option B, American domestic receipts. Option C, American direct receipts. Option D, none of these. The correct answer is option A, American Depository Receipts. These receipts are issued by a non-US company to Americans to obtain foreign capital. ADRs are bought and sold in American markets like regular stocks. It can be issued only to American citizens and can be listed and traded on a stock exchange of USA. Thank you for watching the video. If you'd like practice this quiz, then download the Wonderslate app now. Link in the description below. If you have any suggestion for us, feel free to leave comments. If you liked the video and want to see more of it, hit the thumbs up and don't forget to click on subscribe button to get more updates of the future videos.